Hi, I'm Mark from Property Ventures. Welcome to this week's New Zealand Property Podcast, where we interview the property expert around New Zealand. Hello all, and welcome back to the latest New Zealand Property Podcast and video series. And we have another guest next to me, Jarrod, the Economist or Chief Economist from the Kiwibank.
Chief Economist from mighty Kiwibank.
Well done, Chief Economist, eh? That's pretty good. Property Ventures are getting there now, so welcome along. So
thanks for having me.
I heard Jarrod actually last Friday speak at an event, and I've heard most economists from the other banks speak before, but I loved your way you approached the 30 odd people in the room there and presented it all sort of a simple person like me could understand in layman's terms. What I really enjoyed was the way you gave the overall picture of the world in the last a hell of a long time, yeah. BC days even, and how you broke that down to exports and all those good things that sort of talked about the market and the property market, which people here are interested in. So I love your style in front of 30 people. We'll see how you do in front of a camera and a microphone.
Thank you. We'll give it a shot. Eh?
All good. So just first of all, just tell us a bit about, a little bit about yourself and I guess Kiwibank property, because some people might not know really where Kiwibank sit in the big property, especially the property investor market.
Sure. So I'm an economist. I've spent my entire career overseas. I moved to Australia in 2002 to try and fulfill a few dreams and make something of myself. I started off working at JP Morgan, which is an American bank. I moved on to the Commonwealth Bank of Australia, and then spent some time at Credit Suisse in Singapore. And over that entire time frame, I was both an economist and an interest rate strategist, and lived through the financial crisis where we saw quite a decent recession and property prices come off in parts. Mm-hmm. We learned from that, and I think those sorts of experiences really do resonate with you for the rest of your career, and good learning ground. But I wanted to come home. I am a Kiwi. Gone for too long. Got a bit of an Australian accent, which I apologise for. It'll take a while to beat that out of me, I think. But yeah, no, it's great. We're back. My wife and I and our son, and we're back with our family who we haven't spent much time with.
Okay.
And choosing the mighty Kiwibank was great. It was an opportunity that came up with Zoe moving on within the bank to a better role for her. And Kiwibank is a young bank, very young, and growing, and wanting to do good things, and wanting to do the right things for all Kiwis. So the ownership structure is very different to other banks. And we just announced, I think the other day, that we're quite keen on helping people into Kiwibuild housing. So we're looking to expand, do more, and do right by Kiwis.
Okay, that's really cool. I mean, what's the main difference then between, I guess you say you're different from the other banks? I know a lot of the lending and banks are affected from Australian money and Australian banks. Is that obviously different with Kiwibank? And what would you say is the one major difference between Kiwibank and such an ANZ or Westpac?
Well, our ownership structure is different. So our mandates, our thought process, what we want to do, I believe is different. In terms of funding, banks are quite similar. We take deposits in and then we lend them out longer time. We have a lower reliance on foreign funding than maybe some other banks, particularly other banks overseas.
Yeah.
So I guess we're a bit more homegrown in that regard.
Okay. And over the years, more property investors gone to Kiwibank, maybe when you first started, or?
Yeah, so we're a growing company, and I think we started off as more of a grassroots bank, but as we've grown, we've matured, and we're attracting more of the higher end investors, the ones that will be listening to this podcast.
Yep.
And we're also looking into the business banking, which goes hand in hand with that evolution of a bank. So we are growing and we are expanding, and we've just got a new CEO who is fantastic and really keen on pushing that part of the business.
Right, great stuff. Okay, last week was really good for me because I learned a lot about exports from around the whole world, and you did great graphs of different parts of the world on what's become really important to New Zealand, I guess. Well, for the whole world, it used to be the States and now sort of China and India, the next sort of coming in. So what sort of, do you want to explain to the people watching this without a whiteboard and flash pictures, a little bit about how you see the exports and how that affects New Zealand's volatility or around which in turn may affect the property market sort of thing, or and other markets.
Yeah, so I think the important thing that we need to think about is New Zealand has changed, and our export partners have changed. The world has changed basically. Most of the growth that we've seen over the last 20-30 years has come out of Asia, and that's quite simply because they've got the most population. And they're coming in from a lower base, if you like. They're developing economies. So we're getting a lot of growth out of that part of the world. Now, most of our trade historically has been with the UK and Europe. So now most of our trade is done into Asia. So geographically, we're actually closer to the economic action than we've ever been.
Yeah.
And China and India will continue to grow and I think do good things. India is one country that I'm really looking at to outperform in the next 15-20 years. Most economists, the IMF, World Bank, they see India growing at quite a decent clip and becoming the third largest economy in the world in 2030. So from our point of view, that's fantastic because they're an ex-colony like we are. They speak English, they understand our law, they understand our systems. They play that game where the Aussies, scuff the ball and bowl it underarm. So we've got a lot in common. I think as a trading partner, our ties will naturally grow and they'll be quite an easy trading partner for us. And it's something that we're experiencing now. We're educating a lot of people from India. They're coming down here into our universities. They're having a good experience. They're enjoying New Zealand. And when they go back home, they tell people about it. The next step is we'll start doing a lot more trade with them, and that's great. So China's our number one trading partner.
So it's just a repeating thing of what's happened in China already and growing still, exactly the same thing happening now with India.
Absolutely. So we're worried about China because China's at a mature stage of its expansion and it's cooling down, and their population peaks in the next 10 years. India's population doesn't peak until 2070. So in terms of growth, there's still a fair amount to come out of that part of the world. So as China's slowing down, I think we'll see India speed up. And in terms of what we export, food, tourism, education, you name it, whatever we're pumping out, I think they'll demand more of.
Right.
So it's a good long-term story, and they're our largest source of migration today. So bringing all of that good news back to property, yes, we will see more Indian buyers. And where are they coming from? Quite a high density background. So I think they'll demand a high density dwelling here.
Which is what in Auckland we're trying to get
exactly
right
what we're trying to achieve.
And
it's a new build and it's a apartment, so you can attract that foreign participation.
So there's a lot of people are worried, I guess, with Trump in the States and what have you. If things go wrong there, or they're worried about the dollar going down, and different seems to be every 6 months if one European country crashes. So you're with the States and England or UK not being such a major force anymore for New Zealand, you don't really see that affecting the property market, or even, as I said, even China now, they're a big player with us, but if they have a few issues, we have enough other trading partners out there to keep us going well.
I think it's always a risk. So I think what we're seeing, this rise in populism, so voting in people like Trump or Brexit, or more radical politicians is a concern. And then what that's leading to is people putting up barriers and saying, I don't want to trade with you like that anymore, I'm hurting, I want to protect myself. That's a worry for countries like New Zealand because we are such export reliant, tiny little countries. But then what we've seen so far is not that bad, and it hasn't spiraled out of control, I don't believe. It's not enough to adjust our global growth forecast, for instance, and yes, we are more Asia driven these days, but it doesn't mean we won't see a slowdown in Asia if this gets out of control. So far so good, I think, and we've seen a little bit of a slowdown in global growth, but it's just a cooling. It's not a collapse. So in terms of our outlook, I think we're still looking okay. And in terms of what we need to do here, in terms of property, we're behind. We've got a huge shortage here. We ran the numbers, and we're short 100,000 homes.
When you say 100,000 homes, New Zealand wide or Auckland?
New Zealand wide.
Yeah.
Most of that's in Auckland. Right? I think 65,000 of that's here. It's a big number. It's a huge percentage of a stock.
Yeah.
It's not immaterial.
I think now also you see the 100,000 short now is, I guess New Zealand's got, forever when I was a kid growing up, we had 3 million people lived here. That was it. And then it went to all of a sudden to 3.5 to 4, and I read the other day we're getting close to 5 million population. I guess we've got through that point now, forgetting about immigration. As a country now, we're going to get bigger quicker, and with immigration thrown in, the desire to live here, I guess it's only going to get worse and worse as far as the shortages go.
If we don't build. And I mean, we are building a lot more today than we were yesterday, but it's not enough to run down the shortage that we've built. That has built up over the last 10 years. As you say, migration's been a huge part of that. And we quickly think, that's foreigners. Well, actually, most of that swing is Kiwis. So Kiwis not leaving, starters.
Coming back.
And Kiwis coming back, myself included. Right, that's been the largest swing for us. And then on top of that, we are an attractive country, really attractive. You can drink the water out of the tap here. You can go down to the beach, and it's not, it's not as polluted as other countries. So it's an attractive option. We've got people knocking on the door to come down here, and we haven't kept up the infrastructure.
Right. Yeah. Okay. How's Kiwibuild going to help that shortage we've got? What's your perspective of how long that will take, and etc.? I know people, the government say we're going to come in and we're going to produce how many houses. That can't happen overnight. I think you spoke about that last week. It gets bigger every sort of year, and then they might be doing 30, 40, 50,000 homes a year eventually, but not now. So, I mean, that chat we did last week I thought was quite good. There were a few builders in the room, guys who in concrete and a few other builders and that, and talking to them, their biggest concern is they simply can't do all the work that they've got in front of them. They can't hire the right people. They want more migrants to come in and help out. The costs of materials are high and spiraling out in parts. So the challenge of actually building these dwellings is quite large. I mean, New Zealand's had a major economic shock that we're still recovering from, and that was an earthquake that wiped out our third largest city, right? And that was a major economic event that's taken years. So we've taken resources and we've put them down there, and now we're distributing back out. So had the earthquake not happened, we might have built more homes. But that's something we've got to deal with, and now we've got to catch up, right? And now we're playing catch up. And the government's stepping in with this, with Kiwibuild. It's a great initiative. It won't be flawless. It'll be difficult to do that many homes over 10 years. But good on them for having a go. And I think we should be spending, we should be putting a lot more resources into this to try and iron out these problems, because affordability is an issue. In fact, the question is something you just talked about there, and it's not your expertise, I guess, but why the hell is building costs so expensive in New Zealand compared with some other countries? And in fact, even around New Zealand, Auckland compared with, I was talking to someone today, Turangi, they can build a 2-storey townhouse and sell them for 325,000. Try that in Auckland.
In Auckland too,
or Christchurch.
Not my area, but from what I can see, it's we economists would call economies of scale. You know, if you compare it to, say, Australia, much larger, they can buy a lot more at a more efficient price and get more sort of bang for buck. Geography is another issue for New Zealand. We are a small island, and it's not like, you know, parts of Australia where you can just dump it all into one area and away you go. There are a lot of challenges that we have here, but it is very expensive to build compared to Australia.
Yeah, it is. And I guess it's what you're saying then, it's the opposite of the export advantages we have of getting closer and closer to our partners. Is we're bringing in materials to build, we're so far away. I guess I can explain it that way, it makes sense, I guess. Yeah. Okay, very good. Interest rates. What's going to happen with interest rates? Everyone asks an economist that.
Yeah.
You must be sick of it, Torrance.
No, I love it. Oh no, don't be silly. I'm an interest rate strategist by heart. You see, so I've been doing this my whole life. I love talking interest rates.
That's better than I was going to call you. But carry
on. The good news is not much. Actually, I think that's the news that people should take from this. Don't be too worried about interest rates over the next few years. And the central bank made that very clear last week. They came out and told us we do not expect to lift the cash rate until late into 2020.
Right.
So don't worry about interest rates spiralling out of control or hurting you as a business or an individual. What we will see, hopefully, is global interest rates rising slowly over the next few years, which will put upward pressure on sort of longer term interest rates in New Zealand slowly.
Yeah.
And then eventually a central bank that is comfortable in lifting the cash rate in 2020, not 19. And that, I think, will be a good news story, one where our incomes and our growth has risen enough that we can actually handle a small lift in interest rates in 2020. So I wouldn't be too worried about that side of the equation.
Great stuff. There you go, guys. You can come to see us and buy more property. It's not going to get too much of a shock in 2 years, next 2 years. That's great. Something that come out obviously today, it's been going on seems like forever and ever, the so-called foreign investors, which is not really the real story. What's your take on that? Is it going to affect the property market at all?
I'd have to say at the margin. You know, it's occurring at a time where I believe the tide's already gone out a bit. We saw a huge amount of money coming out of China and going into, you know, Singapore, Vancouver, Sydney, Melbourne, Auckland, you name it. They were buying English property rights, and they were expanding their wealth. Basically, we saw a huge push, and I think that definitely had an impact here. But we've seen over the last few years Chinese authorities already sort of pulling back on that, and I think we've seen it locally. We've definitely seen it in Sydney, Vancouver, and other markets. That's all pulled back already. So to come in and do this is it will have some sort of impact, but not a large impact. And don't forget, in Australia they've already got this rule, and it didn't cause a huge impact over there. The other thing I think that investors are mindful of or concerned about is capital gains tax, particularly in the investor on investor stuff. And again, I don't think it's going to cause a huge impact here. Don't forget, you're asking almost by definition a wealthy individual to pay tax when he or she feels like it on a gain that they make in the future. So if you consider the tax that you pay elsewhere, and then you're going to pay a bit of tax on a gain on a property, is that going to stop you from buying a property? Not if you believe in the income associated with that property and the potential for it to make money over a long enough time frame. I think a speculator would be potentially worried about that, but an investor shouldn't be, because you should be in it for
the long term.
Longer term.
I mean, the speculator thing, I laugh at a little bit. I mean, there are speculators, I guess, and some are out there don't do what they're supposed to do. But people like myself, up to a few years ago, I traded, and that's all I did, and a lot of my friends did. But we all paid our tax anyway, so capital gains tax is going to make a difference. We're already paying it. But I guess there are some might be caught up. I guess the 5 year bright line rule was the one that will hurt many people for for reasons they want to sell and they don't really want to sell, they have to sell, or suddenly they're going to be taxed. They're the ones I think will hurt, and whether people then have to hold on longer, less stock to sell. Don't know. So LVR rules 35% at the moment. People are saying that will come down sometime soon. What about, you'd answer that question or verify what you think, but also a first home buyers, are they going to come back down a little bit, in your opinion?
I think first home buyers will keep climbing higher as a percentage of what's happening, and we've definitely seen that at Kiwibank. We might be skewed compared to some of the other banks, and that's where we really are targeting that market. But I think that will continue to lift, and the more supply that comes on board, hopefully it will continue to lift. LVRs, it's a very good question. I believe that if you look at the credit growth, the quality of the credit growth, and what we've seen in the last couple of years, I believe it's improved enough and slowed down enough that maybe the central bank could look at relaxing that a little bit. But you're not going to take it off completely, I don't think. So we've gone from 40% last year, and they've tweaked it down to 35. Maybe they take it a little bit further from there, just to help put a little bit more oil in the engine, so to speak. I do note that the LVR restrictions here are quite strict when you compare it to Australia.
Right.
So we are really making sure that this market is not driven by speculation or I guess lower quality lending, more so than what the Aussies are on the other side of the Tasman.
Okay. Okay, so what you're saying then, interest rates going to stay the same. The property market, I guess, where do you see in the next sort of 2 to 5 years? I guess Auckland and outside of Auckland, because two distinct markets, and even they've both got markets within markets. But generically thinking, 2 years, I guess, pretty well what it is now. 5-year crystal balling.
Yeah. So we've just put a research note out. We spent a bit of time looking at where we thought the housing market was going to go. Right here, right now, we've seen Auckland cool down. I think we will go sideways here for a while. There is a chance that we see a small fall to 5% fall. I don't think that's something to be overly alarmed about. It's merely sort of giving back a little bit from some very strong gains that we've seen in recent years. And what we're seeing is money coming out, if you like, and going into the regions at the moment. So we're seeing Hawke's Bay, other parts of Waikato, Northland, really taking off. And I think that is Auckland is actually, baby boomers leaving and retiring somewhere else. Selling a $1.5 million place here, buying a $600,000 place elsewhere, and putting the rest in a term deposit. Job done for many. And that's a great trade. That is a lot of people's retirement, a way that they retire. But we're also seeing a lot of younger families looking elsewhere as well. My father lives up in Mangawhai, and we've seen a lot of young families up there. About 500 a day apparently. Wow. Driving to Auckland from Mangawhai. You spend an hour and a half in a car each way at least. But you buy a house up there for half of what you're doing in Auckland. So there is that movement out. So Auckland, I think, prices go sideways, for a year or two. But the fact that we are massively undersupplied here, and our population is going to continue to grow, eventually we'll see prices start to lift again into the 20s, and hopefully that is driven by our incomes lifting, and then the rest of the country you'll see slow down over that period as that regional push eases off, and then pick up again into the 20s. When you look at a market, any market, you want to figure out whether it's oversupplied or undersupplied, and that's the first thing you look at. Are there too many or too few? There's too few, so it's hard for the price to fall too far, in my opinion, unless you get a really bad economic shock.
Yeah.
And unemployment rises substantially, people have to throw the keys back, or interest rates spiral out of control. Again, not forecasting either of those.
Yeah, an interesting couple of points, Steve. There was I've just been thrown in my face the last few months, or 6 months. Had a few blocks of flats in Wanganui we've been selling. And the start of the year, there were a few blocks for sale, and people were offering ridiculously low amounts for this blocks of 3 and block of 4 flats.
Yeah.
Sold 2 of them, moved forward to right now. Got 1 under contract, and there's 20 people that want to buy this last 4-bedroom one that's under offer, and now just today we've actually had a multi-offer on a backup, right. and paying so much more than a hell of a lot more than it was back in the start of the year, but there's none available, and people going, I want this, there's none available, 10, 20 people want to buy it, there's supply and demand, both extremes within 6 months in a place like Wanganui. So what it tells me is, maybe Wanganui's had a good 3 months of growth, I guess. One of those smaller town.
Well, if you look, so I was there a month ago, and I heard all those similar anecdotes. Actually, a lot of people saying that they're moving into the area, but there's just not enough housing, and the rental yield 9%. 9%. I mean, that is off the charts when it comes to property. And I said, well, is it because it's really hard renting these things out, or no, there's just a huge shortage, you just can't get them. So there needs to be a supply response there, but a classic example of Aucklanders coming out as well and looking for something different, beautiful part of the world to retire. And demand just fueling that price rise.
The other thing I also spoke about this morning with someone else was what you alluded to, the shortage of stock, I guess, but it's unusual, I guess, after the market's had all the rises it has. I guess we've come to a plateau more because the banks don't need money, which is a good thing, unlike 10, 12 years ago. But there's not this oversupply of places on the market, which is normally now you go, there's thousands more properties have come on. There's too many properties that all dips, but there's still that real shortage, which I suppose just amplifies the unusualness of it now. It amplifies the fact that we are short of 100,000 houses around New Zealand. The Wanganui story tells that as well, I guess. Because the prices are stagnant in Auckland, we'll say, at the moment, but there's still not many houses to sell. So
I mean, I think the Reserve Bank, they've given with one hand and taken with the other when it comes to property. So they've lowered interest rates, and they've told us interest rates are going nowhere. But in the last 2 years, they've done quite a lot on the macro-prudential side, the LVRs that you were talking about. So if you go back to 2016 and look at lending, 40 to 45% of the flow of bank lending was into investors. And that can be good when they're trying to deal with a shortage problem, but can be bad if you let lead into speculation and that side. And I think the central bank looked at it and thought, we need to cool this down. We need to make sure that the leverage in the system doesn't get out of control. And they've done the right thing, in my opinion, by cooling that down. But we're now at a point now, I think, where job done.
And the great thing is the LVR rules, the governments, or they've got their the Reserve Bank have got their wee toy that they've got, and they can control that and go up and down. They know it works, so that's good. But I'm hoping that toy they have might not entice Labor to bring these other laws in, like ring fencing losses and stuff. I don't know what you know or have heard, or whether that's still likely to come in, or it's a long-term paper they're talking about and thinking about.
I think they'll give us certainty on a lot of that in the next 6 months, I believe. So that they are looking at a number of taxes and ways that ways they can address some of the issues that they believe they've been voted in to deal with. Hopefully we get a lot of certainty on that in the next sort of 3 to 6 months, so that investors can then turn around and say, right, we know the landscape. Now we can make the decisions that we want to make, and we want investors to get out there and increase supply. Right? We look at the shortage around us.
No, that's for me. I'm pretty from everywhere I hear and see at the moment, I'm pretty confident with where things are at the moment. That's our biggest threat, I think, is what the government will change for property investors. So, okay. Well, we've got an economist here from a bank. What would be Kiwibank, even from New Zealand? What would be your advice, maybe, for just someone starting out wanting to buy their first home, and or even maybe first investment property for an investor, a young investor hasn't got anything yet? What would be your advice to get how to get on the property ladder, I guess, if that's what they want to do?
Speak to people like yourself. Really, I mean, get out there. Listen to the advice that's been made by property professionals. As an economist, I look at macro trends and I think we all need to save a little bit more, and we all need to start saving earlier and save harder and do the best we can to get that deposit as soon as possible. But I think that's just very simple advice. There are financial advisors out there, there are property experts like yourself. Sit down and say, how do I get that deposit? And once I've got that deposit and I've got my first home, how do I get my first investment property, and what does that look like? And what do I need to take into account? Because there's a lot that it's a significant investment, probably the largest investment most people will make in their lives. So you've got to think about the interest rate involved. You've got to think about whatever rental return you're likely to get, the costs of looking after that property. But generally speaking, go back over the last 100 years, property's been a pretty good investment in New Zealand.
Absolutely. Yeah. We were once starting 100 years ago, apart from not being here now. Just one thing I've meant to mention before you were talking about it before we finish up was I was talking yesterday just about new builds, and in Auckland there's been so many major apartment projects have fallen over because of finance, and big developers have fallen over, probably because of the cost of what it is and a few other reasons. I was thinking, excuse me, a year ago, there's going to be an oversupply of apartments in Auckland in 3 years' time. I'm now looking the other way. I think there's going to be an undersupply of apartments, and even second-hand apartments are probably going to be a good buy, and even in new apartments. And as I say, the people immigrating, Chinese, Indian, they're used to living in those small environments, and I know people outside Auckland don't get it. I've lived in it for 3.5 years just recently, so I know now and experience what they do. It makes life quite simple, that's for sure, without mowing lawns and doing the gardens. Absolutely. So I can see why they do it. So I don't know, with you, apartments sort of, what do you see? Is that going to be am I right thinking there might be a shortage in a few years' time, or?
I think I'm not as close to the market as you are, and I mean the way I look at it is I do believe that over time we will have more of a preference for higher density dwellings, and I think that is partly because, like you say, we're attracting more people from Asia, part of the world which is already high density, so they'll bring some of their preferences and ways of living down here. There's only so much we can build on the land that we've got naturally. Most economist estimates of where population's going and the level of density that we need is obviously increasing. Look at the Auckland plan, right? It's all about increasing density, right? So yes, we will need more apartments, and I believe our preferences have changed. So my dream of owning a quarter acre block with a nice house and a view, well, that's okay. I can't afford that, so it's something smaller, and my son might grow up and have a preference to live in an apartment. Why not? They're cool. You can walk down the road outside here and you've got all the funky shops and cafes, and it's just another way of living. So yes, I do think we are moving to a high density world, which means we'll have more townhouses and apartments. You only have to look at larger cities to see where they've gone.
Absolutely.
Yeah.
Oh no, very good. It's been great having you here.